Okay, welcome back to another episode of Banking Without Borders. So Yonder is a reward card that launched in 2022 with a pretty simple idea that your spending should unlock experiences and rewards that you actually want. Since then, it's grown into one of the most talked about fintech products in the UK and recently expanded into the premium debit card space. So Jan and I are joined by their CEO and co-founder Tim Chong. And Tim, Yonder has been compared to Amex since day one, and I know you've always pushed back on that. But there's another comparison that we think is more relevant. Yonder Premium includes worldwide travel insurance, accelerated points earning at 4 or 5 for every £1 spent, depending on whether you're on credit or debit card, and a welcome bonus of 10,000 points when you spend £1,000 in 30 days. That costs £15 a month. Revolut Metal is also £15 a month. You get travel insurance, rewards, subscriptions from the FT and Perplexity Pro, and of course, Revolut's app, which is arguably one of the best banking apps in the world. So the first question we want to ask you is, why would someone pick Yonder Premium over Revolut Metal?
The interesting thing is that we see a lot of our members actually use both. It's not a Revolut or Yonder type dichotomy. Revolut is the place where they do things like stock trading, crypto, savings, money remittance, sort of the more wallet style features. But it's less built around, and even though they've got Rev points, and all of you will be very familiar with it. The Rev points, you use them for sort of like hotel vouchers, gift cards, maybe some airline miles transfers, and if you do the maths, it's still not as lucrative, to be quite honest, as an Amex. BA plus if you want to earn Avios points. So you sort of kind of think about, you've got some customers who are like, hey, I want to get the classic Avios program, and we're like, great, stick with your Amex, stick with your Barclays Avios card. I think those are perfect for those who like the traditional Avios program. And then you kind of think about Revolut, which is really known for the subscription with a bundle that you get. Essentially, you pay a fixed fee and you get a set of things included for free. It's less built around like a really rich rewards program, built around discovery, built around trying new things, built around lifestyle. I mean, all the things you described there, Perplexity and NFT, are not things that you do. Things you kind of consume. They're things that you might buy and get an extra subscription, but they're not things that you go out with friends for. A lot of what Yonder customers really do is they say, hey, I'm going to go and spend and discover with Yonder. I'm going to go out and travel and try out a new theater show. I'm going to book a new dinner. I'm going to check out a new Michelin star restaurant. I'm going to put on Yonder, get the whole dinner covered. And then I'll go and do my stock trading with my Revolut account and maybe save and invest with my traditional high street bank. And that's really how we think about the dichotomy of it. I would say that Asian consumers, which I study a lot of time, which is my heritage, really like the kind of super app concept where you have everything kind of crammed into one app, whether it's food delivery, banking, your Chinese red packet, everything kind of crammed into one app, and that's very much like a super app culture. I would say in Western markets, it's not how we think about things. I use Instagram for seeing what my friends are up to. I then use WhatsApp to do one-to-one and group chats. I then might use YouTube for video content, and I don't mix them all together. I don't use Instagram messaging to speak to my friends, and I don't use Instagram videos to watch content. I use YouTube for that. And so we kind of think about each sort of financial product actually sits in a slightly different job to be done in a consumer's life. We really want to be the place where you feel like you're a tourist in your own city and feel like a local whenever you travel. That's where we really excel, and that's why our consumers continue to use us and really love us. But we are unapologetically not trying to be a banking super app that tries to do everything. That's not who we are. And a lot of our customers really like the simplicity of that, right? It's I know exactly what you guys do and what you stand for, and you're not trying to do everything else crammed into one app. You're really focused on this core idea of lifestyle discovery, do things with friends. And then you might use your Revolut for everything else in sort of your financial life as well.
I want to discuss the idea of discoverability or discovering new products and brands with Yonder, because that's one thing that I really enjoyed about using it. I discovered a new brand of chili oil that I've come to really, really appreciate from Yep Kitchen. But there were times as well, and I think there are people listening to this, people who are watching this who have used Yonder who would have the same complaint. I mean, there were times that I couldn't find anything. And it could be, a month. I think, am I right in saying that you kind of refresh the experiences or the opportunities every month? There are long periods of time where I couldn't redeem, which isn't necessarily a bad thing because I'm just accumulating points during that period anyway. But then I'm also somewhat hamstrung by the fair usage policy that restricts how many points I can redeem at any one point. Trying to collect a lot might not actually be that important or that useful. But I wonder how you answer and how you speak to the people that have difficulty finding things to redeem with on Yonder?
Yeah, it's a good question. And look, to be completely honest, it's something that we always want to continue to grow. I would say that this is the most important investment we're making is continue to expand that network of partners. One of the things we realize is that there are times when you really love the discovery aspect of Yonder, trying something new, trying something different. And there are times where you just want consistency. And so the big area of focus right now is actually building out a bit more, let's call it consistent things that aren't necessarily exciting to discover, but things that you know are always going to be there. So we're doing a lot more like coffee shops that we work with are always on now. Some of the more practical things like lounge passes and being able to use your lounge points for a lounge pass, they're not necessarily the most exciting things, but at least it feels like you always have something there that's for you all the time. But continue to also create moments of like, hey, that's quite new and that's a bit of a spark moment as well. So the way we discover internally is we always want anchor brands where they're like always on, they're always accessible. I'll just go as a bit more utility. They're things that you're like, great, I can now use my points for that, tick. But you're not going to be like, guys, check this out. Check out this new place. You're not going to be like, wow, I'm so excited. I got my eSIM on point, so I got to use the lounge again. And let's be honest, like most lounges are pretty commoditized. They're all fine. What I really want though is to have moments, every couple of months, not every month, maybe not every day, every couple of months you'd be like, check out this new place I found in Yonder. Let's go there and check it out and celebrate. Let's do a sauna experience. Let's go and do an ice plunge with some friends. And that for me is a really important part because that's part of the magic. What I feel like most reward cards are built around at the moment are very utility focused. How am I getting the best financial deal? And that's important, and we think that's still a very important thing for people to have. But I would say that the best sort of experience you have in life aren't often about how much money you spent, but like the overall experience you had. Like, did I have fun there? Did it was something really special? And so for us, we want to make sure that our customers are having moments of, yes, I'm getting enough value to justify the fee. Yes, I've got like every month I've got something that's there for me. It's something that we'll continue to work on. But I also want to make sure you have these like spark moments, the moments where you get excited about it and you get that elation experience. And like, let's be honest, you don't get that with a bundled subscription. You're not gonna be like, oh, thank God I got my FT subscription covered again this month. But the moment we hear when someone goes, oh my God, this new place I discovered.
Yeah.
Took my 4 friends out there and had it covered. That was amazing.
I did have times in which I felt frustrated because there were brands that I appreciated or I redeemed with that disappeared. How are you choosing an anchor brand? Do you speak to the audience? Do you ask people? I don't remember seeing an opportunity to say, it wouldn't be like a voting system necessarily, but to say, hey, like, I want to provide feedback. I want to click here and say, like a CTA that says, would you like to see this brand again? Would you like to see more of this brand? Because I think there were times where I redeemed and then they disappeared. And that was quite sad, to be frank. That put me off.
Yeah. So we think about certain brands where you kind of need to save up for it, and so they need to be there for a long period of time. So Qatar Airways has been a long-time partner for us.
Yes.
We've had them on for a very long time. And it's because we recognize that imagine saving up and all of a sudden it disappears. That's not great. It's this weird thing that I described as like revealed preference versus stated preference in the sense of, do you want to see the same restaurants every month? You kind of do, but then after a while you get a bit sick of it. And so we do want to keep that freshness as well. And the other thing that's important to us is there's always the procrastination. I mean, we all procrastinate. It's like, I'll go later. Part of the reason why we want to bring brands on and off all the time was we almost want you to be like, don't wait, go check it out now. I do recognize it creates frustration. The flip side is I actually think that people tend to just leave them on and never go ever. Though. And that's the flip side. And thinking about your traditional rewards programs where you save up your points forever. I mean, the countless people that save up for many frequent flyer miles for that one thing and they just never get around to doing it.
That's me.
Right? They never get around to doing it. I'll save up that one day and do it. And maybe you do it, but by and large, we know a lot of customers just keep putting it off. I almost want to be like, no, don't put it off. Go and enjoy that moment. Go and enjoy that trip. Almost imagine if your Avios points did expire, you'd go and book that flight. It's a bit of a double-edged sword though, right? Because part of that means you need to take stuff to come off so that you kind of create a bit of urgency. But again, for some of the things that we recognize need more consistency. So like our lounge partnerships are very consistent. Our partnership with Turo as well around car rentals. So some of these ones and hotels are things that we really focus on a much longer term partnerships with. Some of the islands we actually agree with the partner, we'll put you on for a period of time and then we'll take you off because we want to keep it fresh as well. But I do recognize that not everyone loves that, and that's okay actually. That's sort of the choice we've made.
Revolut got their banking license recently in the UK after what felt like a century. I mean, I think it's fair to say that we'll see a credit card from them in the near future in the United Kingdom, I'm sure. Are you threatened by that?
I mean, the first thing is Revolut have had a credit card for quite a while now.
In Ireland, I know, and you can get accelerated Rev Points earnings, but in the United Kingdom specifically.
I think about all new entrances, but also at the end of the day, what would I do differently? The answer is not much, which is i.e. focus on what our customers want and focus on continue to invest in that. And that is, I know it sounds like a very cliche CEO answer, but genuinely, like, think about like what would we fundamentally do differently? I think the answer is like we would go deeper on what makes us different and try not to play the game on what they're doing because They are formidable. They have a great product. I have a lot of respect for the team there. In fact, a lot of our team work with them. We have a lot of respect for what they do. They have consciously made a choice though, which they want to build this super app. That's Nick's stated direction, super app. We want to do everything really well. They're in HR. They're in SIM cards. Now they have their own local SIM cards. They have stated they want to move into current accounts and compete against Monzo and Chase. They want to move into wealth management. There's like a stated direction of like really fighting on many dimensions. I think they'll do a great job of that and be very successful doing that. The very nature of doing that though means you need to build sort of a diluted product that sort of works for everyone.
Yeah.
Therefore, the very nature of that means you can't be as focused and as really like focused on your segment. Where we're saying like, Yonder's really great for this type of consumer. It's not great for many others. And that's the philosophy we've always had. We've never ever said to anyone, if you love Avios, go to Yonder. We actually say to you, if that's what you love, stay. But if you want something different, that's where Yonder's great. If that's not what you want to do, Yonder's great. And so I think that's sort of, I would describe as like assertive position that we take in the market of what we are, what we aren't, and not trying to be everything to everyone.
A certain perspective, I'd say you're superior. You know, you are giving people those wow experiences, which you're just not going to ascertain from an FT digital subscription. You know, your travel insurance, without getting into the weeds, is superior. There are things that you're definitely doing that are better. But I do wonder about the scale problem. How do you scale Yonder when things have to be curated, when things have to be quite niche? How do you appeal to a larger audience? I'm sure this is something you've thought about, but I'd be curious to see how you're going to approach that. You can scale the cities, for example, and just have more localized experiences. Is there not a ceiling of potential users that you can have at Yonder as a result of trying to be heavily curated and super special?
Yeah, I think, and maybe I'll quickly touch on travel insurance, and I think this is where the small details really matter.
Sure.
Like we made an absolute effort to make sure it was actually usable. There's a lot of credit cards, and you've looked at the fine print where the travel insurance covers accident cover only on public transport. In fact, it's like that's not very usable. Whereas what we did was saying like, what would we recommend to a friend? And so we have things like off-piste ski cover. No one covers off-piste ski cover, by the way. It's very like niche, but like our kind of customers do off-piste, and they're like, I don't want to get another cover because I want to go off-piste and enjoy myself. It's off-piste with a guide, by the way, and it's things like car rental hire excess. Again, seems very trivial, but I'm sure all of us here have been to that car rental place in Greece where they say, hey, the car rental excess, by the way, if you get the insurance, it's another 100 quid. And you're like, gosh, 100 quid to get the insurance covered. And we're like, no, we're going to solve that. And so for us, we're like, let's not cut corners on the small things. Something as simple as insurance, where we said, let's make sure there's no little things that gotchas. Like the car rental hire excess, even the amount of coverage, we benchmarked it to make sure it covers all the car hire excess places in Europe. So these are like small details that people, may not like talk about and go, hey, let's put a blog about Yonder's travel insurance. But it's something that people really care about, and they always really like that we care about these little details as well. I think on the scaling question, I think it's a really good question. It goes back to this really key philosophy I have, which is anchor brands that give us scale. And, we've started to work with larger group brands as well. We work with the likes of Oaxaca, which is a much wider group. But we also work with the Aubrey and we also work with Heston's, which are like Michelin-star restaurants. And so we always want to make sure we have a combination. We think it's an and rather than an or. Think about Netflix, and you open up your Netflix. You've got some flagship content that is special. Stranger Things, Drive to Survive. They're the things that like they market, sign up for Netflix and get blah. It's on the banner when you open the app. And then you got this thick back catalogue of Gilmore Girls, of Family Guy, of Modern Family, of like, let's call it like Friends, of like filler content, where you don't really, it's not your key flagship thing that makes it special, but it always makes sure you have something there. And so for us, we think about the long-term vision for Yonder is always have flagship things that every month or even couple of months, there's something there you're like, whoa, that's exciting, that's cool. But also there's a big, deep catalog of brands that I would kind of call as like utility brands. Maybe it's a car rental provider we want to partner with. Maybe it's a hotel chain that we want to partner with, which, quite frankly, isn't like, oh my gosh, I've discovered Hertz car rental because of Yonder. It's like, no. But I'm getting value from it and I can use my points. And so we think about it as an end statement rather than all. And what that means is that we can still give you a breadth of partners to access and get value from, but also make sure we surface to you really, really special things that you never would have discovered without us as well. And that's also where part of the work we're doing with LLM has become really powerful, because we start to then surface brand at the right time. When we know you want to discover something, surface that. When you're in a bit of a utility mode, make sure we surface something there as well. And for us, it's always having both. And that's how we've always thought about it as well.
I assume there's a lot of work involved in handpicking these brands. How does that process typically look like? Is that, would they approach you, then you have some criteria in mind that you'd see if they fulfill it, and then decide whether you want to accept them into Yonder or not? Or is it something where you do very targeted outreach and just approach whoever's responsible at that company and convince them to join the app?
It's a bit of both, actually. Actually, surprisingly, more than half our brands come inbound. They reach out to us. And part of being very sort of unapologetic about where we stand also attracts the kind of brands we want to work with. Because the flip side is, if you're a boutique brand that is like really like thought about your brand, do you want to be on a platform like Revolut where there's 50 million customers and you're going to be another offer amongst a coupons and a Boots voucher and an Amazon voucher and an eSIM credit? Like, do you want to live there? Or do you want to be part of Yonder where we're going to make sure we tell a great story about you? We're going to make sure we use great photography. We're going to make sure we really get you in front of the right people. And by the way, you're next to other high quality brands. That's sort of what we see in the other side. The flip side of not being everything to everyone means that the other brands who are quite particular also are attracted to our platform as well. Look, there's a good reason why we work with like high quality airlines that I describe as more like, Qatar Airways and Cathay Pacific. I'm an airline nerd, by the way. If you take the airlines, they have the best airline products, like top 10. If you look at like the Skytrax reviews, Cathay Pacific and Qatar are like near the very top. And we're very particular, like, hey, we want a great product for our customers to have. And the flip side is our airline partners want to reach great set of customers as well, who appreciate that kind of quality product as well. So that's the thing that's for us really important, which is the Yonder promise is that we do our very best, and we will continue to promise that whatever you go to on Yonder and find in Yonder, you will love. Like, the quality's great. That's hard to do, but actually, over time, it creates a place where you earn trust with consumers. And that means you can do a lot more with them as well.
It still makes me think about the scale issue, Tim. Like how you manage to maintain that level of quality at a bigger scale. And also, I assume you're making commission from these partners. Does that also cause an issue with curation and scale, right? You are generating revenue when your members...
Yes, yeah. We get co-investment from the partners.
Again, I fall back to the question of, that's going to cause problems, right, along the road when, you want to try to grow the business, grow the balance sheet, bring on more partners, have, things that people want to purchase, brands that people want to spend with. You think that this is a sustainable business model, even at a scale? I mean, I don't think are you trying to get to 50 million customers as well? And is that going to be feasible?
For us, I would rather be 5 million customers, but being much deeper with 5 million than 50 million. And that's the key difference. I obviously won't share sort of commercial information here, but the LTV of our customers looks very different than a Revolut customer.
Yeah, I can see that because I was one.
The depth of engagement we get is much deeper. The amount of revenue we generate per customer is much deeper, and the LTV is much different as well. So that's it. And again, a choice. You can't get those high LTVs if you're instead of 50 million customers. That's okay. Like, we're not trying to play that game. We're playing a different game. The key question is, if you're any brand, airline, restaurant, direct-to-consumer store, hotel, you need to spend money and you need to grow your business. And where are they spending that money right now? Meta and Google.
Yep.
And they're spending a lot of money there. So really, if you think about it, it's like, why would they keep having money to spend? It's because they need, ultimately, every company has sales and marketing money that they are spending to acquire customers. That is money they continue to spend. What we provide for partners is a way to drive customer value, member value, as well as partner value, because we might find a new customer discovers them, they might spend a bit more, they might go again. So, you got to think about it as like every business is spending money to grow at some point. What we're really saying is like, spend money with us, we'll help you grow, and you co-invest in that, and you pay for outcomes like any other ads platform as well. And so that's a really important part of that. To give you a sense of like the size of that, it's a pretty big market. Just have a look at Google and Meta's revenue streams. It's pretty chunky.
So with Yonder not being for everyone, where do you actually see the ceiling? I'd be curious. Is there like a number? I mean, you probably have investors as well. Probably that question came up at least once. What's the percentage of society that actually enjoys these finer things in life?
Yeah, I would say that we're probably, this is obviously not scientific, but we sort of generally size it about, it's like 10-15% of the market is probably like the ideal fit for Yonder. And by the way, they're not all rich. We've got actually quite a lot of students now on the debit card.
Interesting.
Who like to go out for theatre. They like to go out to Burger and Beyond, right? And so they fit their behavior, but they're not yet rich. But that's okay, because remember, we never said Yonder's a rich person's card. We said it's an aspirational lifestyle product. What do a lot of uni students do is they go out and eat, they go out to bars, they go out and, go out to theatre, they go get burgers. So yeah, they're probably less likely to go to our Michelin star partners. But, people often think, oh, all your partners are expensive. I'm like, Burger and Beyond is a £10, £15 meal. That's not expensive. A theatre ticket with Yonder, £10 and £20, £30. So we do have a much wider range. We do have the really high-end expensive places, but we also have the Japanese ramen shop that's £15 for ramen. So for us, that's a really important distinction as well. What we're not trying to be a Soho House where it's exclusive. You can only be part of it if you're part of the club. And by the way, this is only good for you if you're ultra rich. Like, no, that's not that is never the goal of Yonder. What the goal is like people who like to go and explore and try things. That's for you. That's Yonder. And that could be a 19-year-old. In fact, I had a custom interview with an 18 or 19-year-old. Her mum signed up for the subscription credit card. She signed up for the free debit card. She gets her mum to earn points. Her mum sends her the points. She uses her points for theatre, for, arcade food hall, for one of the more casual places. She's said to me, I'm not saving up for these big things. I love the free coffee. I love to do this. I mean, when I was a uni student, I still went out. I mean, I'm sure when you guys were, were younger as well, you still went to bars, you still went out to theatre, you still went out to watch football, you still went out to go for dinner. You probably weren't dropping £300 that night, but you were still spending money. And so for us, that's a really important distinction, is that it's not a rich person's product. It's a really about discovery and aspiration, not necessarily.
Yeah. It's interesting that you raise students or younger people using these, because as far as I understand, you're using open banking to help basically lend to people. Like Legacy wouldn't necessarily do this, but you're using it to lend to people with thin files. Give people access, essentially. Yonder makes credit look cool, I would say. It makes it kind of look like a lifestyle accessory, and that's obviously fine. But I think there is also a fine line between financial inclusion and just glamorizing debt, also to a generation of people that are under pressure from a cost of living crisis. So I wonder, how do you make sure that Yonder doesn't just become like a pretty version of a debt trap? Because a lot of people that might be using it don't fully understand that behind a credit card lies a 30% plus APR.
Yeah, it's a good question. I think a lot about it. And I think the most important thing is, I always joke that rich people call it leverage, other people call it debt. And why is that? And I think it's actually people's relationship with it. That every single person is taking some form of debt. If you're paying lease on a rental property, you're paying debt. You're just paying it to someone else. If you take a student loan, you're paying debt. So I think the fallacy is to go, the right answer is to run away from it. Because let's be honest, who in the world out here is buying a house without a mortgage? Like, everyone is taking some form of debt in the future. Nearly everyone is taking some sort of student loan. Nearly everyone has some short liquidity need from time to time. What's really important to us is it's not good or bad. It's a tool and should be treated as such. I use the analogy that credit is like fire. Fire is one of the most important things. Combustion, cooking, heating. I mean, nearly everything requires some sort of combustion and fire. And yet at the same time, fire can cause damage, it can burn you, it can, cause a lot of sort of distress. Does that mean you should get rid of fire? Well, no, you can't get rid of fire. It's a tool. And so for us, what's really important is when customers use the credit, they understand it's borrowing. It is not free money. And that's the key distinction. What we've found in general is people who think about credit as free money, that is a bad way to think about credit. When you think about credit as, what I'm doing is I'm getting money ahead of time, I'm getting it early, therefore I'm paying a fee on that, and therefore I need to make sure I'm making the right decision when I do that as well. And there's lots of small things that we've done in the product. For example, when you choose to borrow, we actually tell you how much your interest will cost you in pound figures. Because let's be honest, no one knows how to convert an APR into an actual cost of borrowing. Yeah. The maths is so complicated. So we do the maths for you. In fact, we have a little slider that says you're paying X pounds of your bill. That equates to X pounds of interest. And the dial goes orange. In a small thing, it goes from green to orange, and if you pay the minimum payment, it goes to red. And these are really small design choices we made, because we're like, hey, we want to make you to think about you are borrowing money now, and there's an interest charge of £3 next month. Do you want to go and do that? If yes, go and do that. That's completely fine. So for us, what we really want to make sure is people are making informed choices, but not running from it either, because you will, at some point, need to access credit, whether it's for a big purchase, a small purchase, or whether it's even building a credit score as well. And what is true is that for a lot of young people, one of the big priorities for them is starting to build their credit score in their 20s. So when they apply for a mortgage in their 30s, they have a thick credit file as well. So actually we see some of our customers saying to us, hey, I'll take the debit, I might take the credit, but I'll take a small credit line. In fact, what's unique about Yonder is you can take a small credit line of £100, but you could top it up like a debit card. So you still get the top-up benefits, which is why we have a linked bank account. You could top it up like a debit card, get all the benefits of building a credit history, but never borrow on it. You just top it up, pay it down, top it up, pay it down, top it up, spend it down. It means you can essentially use it in debit the whole time, but get the benefit of Section 75, the credit score building, things like that. And that was an intention of why we built that as well.
I actually really appreciate the fact that you've got a debit card now, from the sense of just getting the barrier of entry just is reducing, because I would recommend Yonder to people, for a number of reasons. I mean, the app is fantastic. The curation is great. It is a beautiful place to shop essentially, or to look for rewards, but also from like a travel spending perspective, it's one of the best rewards card for spending internationally, because Amex is charging 3%. You have certain, you can get MasterCard's exchange rates with a debit card and some credit cards, but Yonder is a really solid way to earn points on international transactions. And so I would want to recommend it, but also the credit card was a bit of a barrier of entry. People are frightened to get rejected. It might impact their credit score. Having the debit card is good, because it gives people the opportunity to get a taste of Yonder. Cities, just quickly, any new cities coming up? I know the Netherlands and Europe, but what about the UK?
We've already just recently launched in Netherlands, and we're doing some early beta testing. So technically that's already happened first, but we're definitely looking at doing more cities. To be honest, one of the things we look for is enough density of things to do as well, because we want to keep it fresh. I don't want to have a city open and have like the same 8 things there for 2 years straight. It's not very interesting. So we do want to keep it fresh. But we've also got some of our partners, interestingly enough, again, this is why I can't say too much, actually are expanding on their side. And so we talk about a lot on how do we work with them to launch their brand into new cities as well. And that's, again, probably talks to a bit of the symbiotic relationship we have with the brands as well, in that we work with them to help them grow their business as they start to expand their footprint. That just doesn't happen when they work with some of these large platform players, which is just really like everything to everyone. With us, they're like, you talk about us in the way that we want to partner with you as we launch into new cities as well.
Okay, Tim. Well, thank you very much for your time. It's been fun talking to you today. I think if anybody's watching or listening to this and they have any questions that they would like to push towards Tim, pop them in the comment section. I'm sure yourself will read them, or someone from your team will read them, and we'll try and get some responses out there. But thank you again for your time.
Likewise. Thanks so much, Tim.
Thanks, Tim.
I don't know necessarily if they're trying to replace Revolut, Jan. It sounds more like they're just trying to appeal to an audience that are just like looking for, like you always say, the finer things in life. Jan, before this call, kept saying, I'm a Yonder customer because I like the finer things in life, which isn't necessarily true. And Jan is the opposite and is more of a, would you say you're more of a Revolut customer then, because you just like Perplexity Pro?
Yeah, I'm a super rational person. I'm someone who doesn't go out much. I'm someone who doesn't...
That doesn't mean I'm not irrational because I like nice gin.
That's no, Johnny. That's not what I want to say. But you have interest in these. Not sure if luxury goods is the right word, but you'd go ahead and buy chili oil on Yonder or through Yonder from a retailer. You'd consider buying an expensive jacket that costs potentially £300. Those are things I wouldn't do, and I believe there's a lot of people out there that are just like me, and I'm sure there are also some that are just like you. But from what it sounded to me is that Yonder is clearly trying to appear to the Johnnies of the society, and really not interested in tapping into this general market. So the comparison to Revolut is totally obsolete.
Yeah, I think he put that to bed pretty swiftly. I would have liked a little bit more insight into what cities that we can expect in the future.
Absolutely, would have loved that.
Because that's what people talk about. People talk about Yonder feeling like a London-only app, which isn't true. You've got Bath, Bristol, Manchester, but where's Leeds? Where's Glasgow?
Yeah, but the majority of the experiences are in London, right? If you want to go out, it's mostly, if you want to enjoy these local experiences, it's probably going to be somewhere around London. And if you're not in London, you're going to have a limited experience. Let's call it like that.
Generally, though, I think Yonder is a very good product. I have certain problems with the fair usage policy, so you can only redeem a certain amount of Yonder points, depending on if you're on premium or free. I would like to be able to spend my points how I wish. And as a result of that, you can end up with a bit of a mismatch of points. Like when I finished using Yonder, I was left with points that I couldn't really use, and I just wanted to close the account. Besides that, Jan, fantastic travel card for earning rewards. No fixed fees on transactions.
Absolutely, yeah.
you get MasterCard's exchange rates, and you get Yonder points. So, you can sign up for Yonder Premium, pay for your hotel on the credit card or on the debit card, get 4 Yonder points or 5 Yonder points per pound. So you're going to get a load of points. You're also going to get your travel insurance as long as you are paying for the hotel or transport costs with the card. So there's a bit of a gotcha there. He didn't mention that, interestingly, when we were talking about the travel insurance, Jan, but I think that's an important nuance because Revolut makes you pay 75% of the transport and accommodation costs to qualify for the insurance. Yonder, as far as I believe, it's the full transport cost or the full accommodation cost.
Okay.
But that travel insurance is solid, Jan. So you can get that. You can earn some great points. And also by paying for your hotel, it's probably going to cost more than £1,000. You're going to get that welcome bonus of 10,000 points. That's what I did when I first signed up for that Yonder credit card. I got the premium one and I went on holiday with it, paid for the hotel, got the welcome bonus and ended up getting quite a lot of points.
Yeah, I bet. And you went ahead and bought chili oil. Right, Johnny? I mean, I see. I get it. For people like you, it's great. It's a great card. For me personally, not sure I'd see a fit. I'll probably go ahead and prefer some simple cashback card instead of Yonder. But I mean, I appreciate that there are people like you out there that for them Yonder is probably exactly right. One thing I find personally dangerous, and you've quickly touched on it in the interview, was the fact that Yonder is obviously trying to appeal to this young audience of people that are going out regularly, that really enjoy their life. Yeah, and then the debt question, right? Tim said they're doing a lot to educate these people, but we also know that, even educated people make bad decisions all the time, actually. So many people do that. People are not able to control their actions in many cases, especially when it comes to finances. And I mean, it's a bit of a dangerous topic.
We'd be curious to hear from those that are listening or watching this. What do you make of the Yonder card? Firstly, have you used it before? How was your experience using it? Was it similar to mine, where there were times in which you found redeeming to be quite challenging because there was nothing you wanted? And also, were there times when you discovered brands that were actually quite exciting and new and that were genuinely beneficial to your life? Like I found some fantastic gin, got a bit drunk on it and enjoyed the flavor. Like that was nice. Honestly, that was nice. My wife and I had a nice time with some gin. Maybe I'm sharing too much information. But, what do you make of the Yonder card? What do you think? Be nice to hear from people in the comments. And as well, Jan, what do people think of this style of episode? Slightly longer, free-flowing conversation with someone else. I thought that was quite interesting, right?
I had a good time. I'd be curious as well. Please write into the comments. It's been a pleasure, as always.